Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. Last week, US equity markets rebounded following robust earnings reports from megatech giants Alphabet and Microsoft, whose reports confirm the impact of AI on revenues is not merely hype, but a tangible reality. We await further evidence of AI's impact in this week's earnings reports from fellow megatech giants Amazon, Apple, and chip maker AMD. Ahead of Thursday's FOMC meeting, the Fed's preferred measure of inflation, the core PCE price indicator, rose by 0.3% month on month on Friday night, taking the year or annualized rate up to 2.8%, which is where it was the previous month. Following firmer than expected inflation data, the Fed will likely keep rates on hold on Thursday at 5.25% to 5.5%. and sound more hawkish in the accompanying press conference. The rates market is already pricing in a more hawkish outcome, with a first rate cut now pushed back until December after the US election. Let's take a look at the charts of the S&P 500 and the NASDAQ as they start the new week. Right, here we are looking again at the NASDAQ weekly chart. And the reason for that is we've been following a wave counts on the longer timeframes quite closely. In an Elliott wave theory, we're seeing a 5-wave advance, which usually then leads to a pullback. And we had highlighted the 7 weeks of flattening out of the uptrend in the NASDAQ and said that if the NASDAQ were to break below March lows coming in around 17,750-ish, it should see the pullback deepen towards 17,000. And that's exactly where it got to the week before last. Now, what you have seen last week was this rebound, which has taken it back up above 17,700. And for me, when I'm looking at this rebound, I see it as the second wave or wave B of a 3-wave correction. What I'm looking for this week is some signs of topping around this area here. It is potentially a situation where we'll see some overshoot because of the earnings reports that are coming out, because of FOMC, because of non-farm payrolls. So while I'm allowing for a little bit of overshoot, but this is the area where I'd be looking for signs of topping before another leg lower for wave C. Signs of basing here, I think, would be a wonderful setup for a long opportunity. So let's wait and see how this potential up then down plays out in the NASDAQ. Now, for the S&P 500, a similar wave count, I'm seeing this as part of wave B, or the second wave of a 3-wave Elliott wave correction. Looking for signs of topping somewhere around 5150-ish before another leg lower, somewhere into this 4850 to 4750 region here. Again, if we were to see nice signs of basing, also leaning against this 200-day moving average, that would be a nice setup for a long trade. But let's see how this final thrust higher plays out this week, ideally, and then we start to see the turn lower. Keeping in mind, if we were to get above 5,200, that probably suggests that this was the final stage of the correction and that the up move has resumed. Thank you for listening and have a good week ahead.